Hi there, welcome to Kneppy Invest and welcome to September 3rd, 2024. We have about 1 hour and 8 minutes left of trading today. And overall, today has been slightly negative, except if you're in mining, because resources indices down 0.98%. But is interesting. At about 11 or between 11 and 12, resources indices was actually up. So something happened at that point, and ever since then, the resources or the mining sector has gone down. So I'm wondering if that has something to do with iron ore, which I'll discuss in a minute or two. Now, the agenda for today's video is fairly similar than other videos. We'll have a look at the best and worst performing sectors, indices, and companies, and then we'll go through the top 5 stocks of the day. Yes, I have come up with the top 5 stocks of the day. I did have to dig deeply because, again, not many intriguing, interesting announcements have been released today, and I don't mind it. In fact, I like this quiet after a very hectic last few days of August. Might have a look at some charts. I do have a line up of 5 companies to have a look at, and also maybe a few of the comments. Now, there is also a possibility that I might keep this video a little bit shorter, and also a very slight possibility I might do a standalone video, and that standalone video might be, well, actually, if I do standalone video, it will be on Stealth Group, T code SGI. I do have that company lined up to be in the chart portion of this video. So a very slight chance. If I don't do that standalone video today, I might do it the next few days because I'm thinking of mowing the lawn. So I want to keep a little bit of spare time later this afternoon to do exactly that, because it has been quite hot in Brisbane the last week. And for some reason, the lawn is just going absolutely bananas. Well, there is a reason behind it. It's nice, warm weather, and the grass loves warm weather. Anyway, rambling on a little bit. So let's get stuck into the video, and let's have a look at the ASX today. And I was just mentioned that mining has fallen in a bit of a heap since about 11. So nothing much happening otherwise, because American markets were closed overnight, and we typically do take the lead from the American market. So if they're closed, we just don't know what to do. Are we going to go up? Are we going to go down? We just don't know. Maybe even the American futures are doing nothing right now. So no direction in the Australian indices apart from mining. We don't have the mining here. What is the mining indice? Do we have a mining indice? Which one is the best one? AXJR. In fact, what I'm going to do is I'm going to open up all the indices and look at the worst performing one. Oh, consumer staples is down a fair bit. XMM or X. Have a look at XMM. I just want to see if there was a point in time when the mining started to nosedive today. Let's have a look at the 1 minute. Well, according to this, it happened at about 1 o'clock. So 2 hours ago. Yeah, it was actually up by that point. And then 1 o'clock, it nosedived. And I actually did see this article from the Financial Review. Iron ore sides below $100 a ton as stock sits on Chinese stocks or docks. Did I say that right? As stock sits on Chinese dock. You could have titled that a little bit better, AFR. Jeez, talk about tongue twister. Maybe it's just me. So maybe iron ore is down a fair bit today. Let's have a look. Iron ore, where is it? Iron ore was down 2.5% today, and it really started going down, yeah, at about 1 o'clock. There was a bit of a dip earlier. There was a nice little rally, and it's really fallen off since about 1 o'clock. So I think, without doubt, BHP, Fortescue, and Rio Tinto are probably down a fair bit. Well, when I say a fair bit, maybe 1 or 2%. So definitely they will be in the worst performing companies in the ASX 20. So let's go back to the sectors and indices. And IT's had a good day. Financial sector is up as well. So the banks probably had a good day. A lot of other sectors are either flat or up or down slightly. But energy, bad day. Materials, bad day. And staples. Why is staples down a lot? Maybe some companies have gone ex-dividend. Maybe they've all gone ex-dividend at the same time. Let's have a look. And yeah, this has been fairly broad sell-off in the consumer staples. Woolworths down, Coles down, and Endeavour Group down, A2 Milk down, all down by over 2%. I just wonder if some of these companies have gone ex-dividend. What about Woolworths? Let's have a look. Oh, the wrong T code. Someone did mention in my comments that one of the reasons why GR Engineering went down was because they went ex-dividend. So this time of year, you do have to look to see if a company has gone ex-dividend. There we are. Woolworths, ex-dividend. So have they all gone ex-dividend on the same day? If they have, we can just ignore this little bit of sell-off. Ex-dividend, 3rd of September. There you go. Consumer staples, nothing to care about here or be concerned about. Looks like maybe they've gone all gone ex-dividend. Maybe except A2 Milk because they don't have dividends. I'm pretty sure. So let's move on to the best. Actually, no, let's have a look at the X20, ASX 20, just to see if banks have done well. A few of those companies have gone ex-dividend, like Woolworths, Coles. So I want to see if the banks have done well and the iron ore companies have not. So let's have a look. Starting off with the worst performing ones. So there's Woolworths and Coles, ex-dividend. Then Rio Tinto, Fortescue, and also BHP, all down a fair bit today. And in the best performing companies, we have Macquarie Group, CBA, 3rd, ANZ, 4th, Westpac, 5, NAB, 6. So that does some sort of confirm that we actually didn't need confirmation because we already knew the financials had done well today. And WiseTech is in the tech sector, and that's done well also. So Commonwealth Bank is now becoming even more expensive, which is insane, still insane. So the old saying is, the market can remain far more irrational than you can stay solvent. And something like that anyway. And I think the market is becoming more and more irrational when it comes to CBA. Maybe not the other banks, but I would suggest that even the other banks are becoming a little bit overvalued. I would definitely not even be thinking about buying the banks right now. If I was a holder, I wouldn't be probably thinking about selling them just yet. However, maybe. Let's have a look at the worst and best performing companies. And I have a feeling one of these companies is going to be in my top 5 stocks because I have cheated. And that company is Golden Deeps, a company I've never heard of before today. Share price is currently up 185.71%. Early in the day, it was up over 200%. So we can move on to the next one. It's a small mining exploring company, but share price is up 200% or so. So I'm going to have a closer look on fairly big turnover as well. So volume is quite important. Otherwise, some of these companies are up on very little volume, which means it's just noise. So here's a company, turnover $520. Another company, turnover $637. Yeah, nothing else here. But there's Biome. Biome up 11.91%. Probably the most interesting announcement of the day. Sorry, Golden Deeps, but Biome is the most interesting announcement because it is a trading update, and I love trading updates. And you can see by the market reaction, it was a positive trading update. Otherwise, nothing else here of interest or note. You might disagree with me if you own some of these companies. Now let's have a look at this by market. And why is my mouse? Then my mouse is working. Usually, if you click on market cap, it goes up and it changes. There we go. Just had to refresh the page. Oh, Objective Corp. Go Objective Corp. Up 6.23%. Go Paragon. Not sure what's happening with Cettire. Share price has gone from nearly $1 to $1.56 in a few days. Might have a look at the chart for that company. I don't think I'm going to really like what I see. AMA Group. I mentioned this company in my technical analysis because it looks like it wants to break out. So possibly the AMA Group is starting to look even more. I did think it's going to look stronger than it did on the weekend. And global data centers up 7%. That's definitely not noise, but last time I looked, they had not released an announcement. And maybe they should have because something big happened to that company recently. And that's why the share price is up 7%. Shape Australia fell down a lot yesterday. Now it's recovered. And Visan keeps on doing what it's doing. And SKS Technologies had a bad day yesterday. It bounced just on close, and it's bounced again. Okay, so let's have a look at the worst companies or the top losers today. And I suppose most of these are probably just noise companies. Nothing much. No reason why any of these companies are down big. No news flow. Maybe I missed one or two here, but yeah, there's nothing here. Nothing here. So let's have a look by market cap. Oh, mineral resource down 5.94%. I did include that in my chart portion of the video. And the reason I did that is simply because of a little now. Was it here? It could have been Sydney Morning Herald. Yeah, there was something in a paper written about mineral resources being at a 3-year low. So I thought, oh yeah, let's have a look at the chart for mineral resources or MinRes. Not surprising, with the share price down 5.94%. Maybe it's been sold off because someone read the paper and went, oh, I don't want to be owning a company that's at a 3-year low. And otherwise, yeah, nothing else of massive interest here. Okay, so let's have a look at the top 5 stocks of the day. And we'll start off with number 5. And there's a couple of reasons why I decided to start with this company at number 5. And they actually did release an announcement today. So technically I can do this. So the top 5 stocks of the day typically have released announcements. Now, actually this morning, Scott, II, or 119RB, do you follow Atomos at all, AMS? Funny enough, AMS is American Meteorological Society, and many years ago they actually did give me a grant, or a, whatever you call it. What's the something that's fairly scholarship? So the American Meteorological Society gave me a scholarship. This would have been back in 2001, and I had to go to Orlando, Disney World. No, it wasn't Disney World, for a dinner, and I had to go to Boston to collect the scholarship or something like that. Anyway, so every single time I see Atomos's ticker code, I just think of that time. Anyway, Atomos, according to Scott, Atomos has a narrow moat, like a high 80s at least. Morningstar has missed it, but soon to catch up. So I'll talk about Atomos now. And the other reason they did release an announcement, Atomos. So share price is down, share price at 4 cents. And the announcement today was a presentation. That's it. Financial year 24 results presentation. I had a quick look at their results on the 30th of August. It's really interesting that they released a presentation 5 days from when they released the results. But I have noticed a few companies doing that. They release their results, wait a little bit of time, and then release a presentation. I don't mind that. It's okay. So let's have a look at their results. Now, this company has had a troubled past. So I don't follow this company really closely, but I do follow this company close enough that I do remember something happened. The CEO was fired, and I have a feeling the CEO wasn't doing that job or something ridiculous. And that particular year, this company just did not perform at all. So I'm just going to go through the announcements. Can't remember when this was, maybe 2 years ago. So 2 years ago. Oh, they were in a suspension for a long time, weren't they? Yes, let's have a look at the chart. I usually have a look at the chart last, so we can tell what happened. They were in suspension for the longest time. So you won't be able to see this via, you just look at the chart. Chart's pretty bad. So you can see that even though there's no gap, and TradingView doesn't have a gap, if you go to ComSec and look at the chart here, and this is the six-month chart, but if you go to the 1-year chart, well, that is a 1-year chart. No, it's not the 1-year chart. Oh, it's because it is going back 1 year, but because there was no trading this company before the 20th of May, it's actually not a 1-year chart. This is only about a 4-month chart, actually 3.5-month big chart. So they were put in suspension on the 27th of February 2023. And then when they came back to trading, they did a pretty big capital raising, if I remember correctly, on the 21st of May. Share price dropped on that day 68% because, again, if I remember correctly, the capital raising was done at a significant discount because maybe otherwise they wouldn't be a viable entity. Anyway, so a significant announcement this company released on the 6th of May 2022. Share price on that day fell 49%. And before that, the share price was in a downtrend. And really the catalyst before the downtrend was a negative announcement on the 23rd of November 2021. The AGM share price on that day fell 7.4%. So somewhere in here, in fact, let's go, oh, what are you doing? Let's go back. I do get frustrated sometimes. 6th of May 2022. 6th of May 2022. Trading update. So again, How important are trading updates? The share price of this company dropped. How much was it again? Share price of this company dropped 49% on a negative trading update. So hopefully, if you're a little bit skeptical about the importance of trading updates, this should help you understand. Trading updates are very important. Now, the problem is when they do release this, and if you're a shareholder, it doesn't really matter because the share price immediately dropped. But it is and could be considered a catalyst for a significant derating of the share price. And the share price has fallen a fair bit from then. In fact, you could have sold it on this day at a share price of 26 cents or so and still be significantly better off if you maintain a holding. Some people do that. They see the share price drop like this and go, well, there's no point selling. I'm just going to hold my shares and hope it gets back up to the price I bought. You're still waiting and you're down almost 80% or something like that. So what was this trading update? Let's open it up in market index. Without doubt, this is negative. Yeah. Oh, there we are. Trading update. Yeah, I'm not sure if the word highlights is the best use of the word. Okay, there it is. Demand for existing and recently released cloud-enabled products provides a strong medium-term outlook. So start off with a positive before you get to the real negative things. However, financial year 22 revenue is now expected to be 80 to 90 million, and EBITDA margin is now expected to be 6 to 8%. So obviously that was a significant downgrade from what they had previous to that. And at some point, probably after this, the company decided to fire the CEO. And I assume it's after this. So new CEO is in play. I'm pretty sure that is not right. Pretty sure Jeremy Michael Young has not been the CEO since September 2009, because I'm pretty sure they fired the person who was a CEO. So maybe they've rehired him. Where's the announcements? There we go. So let's go back again. Let's have a look. Let's see if it was this one. CEO appointment. There it is. 5th of August. CEO appointment. Let's go back. Yeah, maybe they fired that person before May 2022. Anyway, I'm not sure what that CEO was doing. They weren't doing their job. And trouble times for Atomos. So let's have a look at this company's financial results. So revenue, remember that financial year 22 revenue, 80 to 90 million. Revenue for financial year 24, 35.7 million. So they might have a moat. So maybe they do have a narrow moat, but they've yet to prove that they can take advantage of any sort of moat this company has. I suppose some of their products they do sell, and this company sells pioneering products that transform the way film and video content is made around the world. Stuff like that. Anyway, so stuff I would never use, and probably most of you would never use. I do think it would be fairly specialized and equipment, and the total addressable market wouldn't be that high for this company. But the main thing for this company is their revenue. So down a little bit from last year. So $35.7 million of revenue, gross profit 11.2 million. Gross margins did increase from last year, but operating expenses greater than the gross profit, which means this company had a loss of $22.4 million for the year, which is better than last year. Last year had a loss of $61.1 million. I think eventually this company will probably get back up to profitability. So let's have a look at their history. But I think it's just that troubled past, and the P ratio of this company would be fairly low right now. I would be thinking about 30 to 40 million, 50 million. So you are buying it at a suppressed valuation to the potential of the company. So if you just look at let's have a look at the revenue. So the revenue peak was back in 2021, $78.6 million. So the revenue has halved since then. And before that, there was actually nice growth in revenue. And I'm pretty sure the company was profitable. Yeah. Looks like they were profitable that year by $4.2 million. Their only profitable year. So very important that they were profitable at that point in time. And I would assume that the market was quite positive about this company. And if you go back through the chart, the share price high for Atomos was just above $1.50 back in late 2021, just after they released those results. So around that time, the market was positive on this company. So you can just see how quickly the sentiment and things can go wrong for a company. Share price of Atomos has dropped from above $1.50 to 3.8 cents, although in ComSec it's 4 cents. So I don't know. This is a sort of company where I might put on my watch list for a little bit of time. So I have this in my IT, tech, and software, but that sort of watch list, I only look once every week. So it's not on my watch list. It's not on my watch list where I'll look at those companies or the charts for those companies in that watch list all the time. And the main reason is, even though maybe the worst is already in for Atomos, they still have to turn things around. They still have to start increasing their revenue, become profitable again before I think there can be a turnaround for this company. At this point in time, maybe not there just yet. Now, in saying that, the share price has doubled. So the share price was at 2 cents not that long ago. So share price has doubled, and that's what can happen to these sort of type of companies in these sort of situations. Share price can bounce quite nicely. You can get a nice little 100% return in a fairly short period of time. So when the share price was 2 cents, the market cap of this company would have been $30 million. And maybe that does represent good value for this company. So if I see it, actually, yeah, there is. If I do see maybe a good financial result from the company, financial news, a good positive trending update from the company, I might become a little bit more interested, but not just now. Let's have a look at their presentation, because since they did release a presentation, maybe I should have a look at it very quickly, and I haven't opened this up yet. Let's have a look to see what they say. Pretty nice. Atomos is known for world-class product innovation and design. 100,000 active users. So they do have quite a few users there. And these are some of their products. I like this already. Ninja phone. Yeah, I do remember that one. So you attach it to... turns your smartphone into a high-end recorder, monitor, and streamer. Shinobi. Ninja. And Sun Dragon. So these all have Japanese names. Wonder if that's... maybe the founders of this company were Japanese. I don't know. I'm just going to see if they say anything fairly interesting here. Oh, look at that. In January 2024, return of co-founder Jeremy Young as CEO. There you go. And managing director to drive new momentum to product and operations. I actually do like that. I do like when there are co-founders as a CEO and managing director. Not all the time, but I think it's a good move. Shares on issue 1.2 billion. I would also say, because the company did that fairly dilutive capital raising at a pretty big discount, shares on issue have significantly increased from when the share price was above $1.50. In fact, we can have a look just by here. So shares on issue have increased from 200 million to 200 million to, where is it? 200 million to 1.2 billion. And there's heaps of options on issue as well. 551 million options, and they're in the money right now. The options expire November 2025 at 3 cents. So they're in the money. So in fact, shares on issue could be as high as 1.7 billion, maybe even higher than that. Top shareholders, and Jeremy Young is one of the top shareholders, owns 8.2% of the company. So there is a little bit of skin in the game for that. But if you have a look at the financials, probably not much to really, what's the word? To really take home, to really be considered a catalyst for even thinking about taking a position in this company yet. I think you need faith that they can turn things around and they can grow revenue. So I'm not even sure why I'm going through this. Balance sheet, net assets of net assets of 2.4 million. And outlook, okay, maintain revenue, 40 million plus at 40% gross margins. Mentions here large total addressable market opportunity, 1.5 billion US dollars, CAGR 30%. Okay. A restructure expected to be complete in quarter one financial year 25 with targeted EBITDA break even around 45 million of sales, targeting increasing sales momentum in first quarter. So I still think you need a little bit of faith in this company, and I wouldn't be adverse to just maintaining or being patient and maintaining your eye on this company moving forward. So that's Atomos. Spent a little bit more time on this company than I wanted to, but coming in number 5. Coming in number 4, we have Hancock and Gore. Hancock and Gore. This is an interesting one. They've just made an acquisition with Mountcastle to merge with Schoolblazer and equity raising. I actually did have a look at the equity capital raising presentation. Now, I have never had a look at Hancock and Gore. It's in industrials. I couldn't even tell you what they do. So if you have a look at the summary page, I should open up the presentation first. Let's do that. If you go to the summary page in ComSec, they will have an about section here. Diversified investment company with a focus on active management and driving share returns. I wonder if they do own this, what was it called? They must own this Mountcastle. So I had a look at this, and straight away, something intrigued me about this announcement. Schoolblazer merger with Mountcastle and equity placement, creation of a global school uniform platform. I was like, what the hell does that mean? Global school uniform platform? Okay, so I understand school uniform, but platform? That sounds like software or something like that. AI. But has this something to do with school uniforms? Is this a play? Not a play. I mean, is this an investable opportunity? Is this a thing that you could buy into companies that do stuff with school uniforms? I had no idea. And yes, that is absolutely true. Merger of Hancock and Gore's 100% owned asset Mountcastle, which I have no idea what that is. Mountcastle. I want to see if you can Google it and you get something. So it's a manufacturer. Okay, I wonder if they manufacturers our products. I'm assuming this is the same company, and does look like school uniform-ish. Yep, so they do school uniforms. Maybe other type of uniforms. They've been in existence since 1835. They also do headwear. Oh, they do headwear, do they? Because they're just talking. Oh, they do shirts, headwear, shirts. So it looks like they do uniforms. So this could be, yeah, this sort of makes sense. A company that manufactures uniforms merging with another company that manufactures uniform, because Schoolblazer is a uniform or school uniform manufacturer, creating a global uniforms platform. I don't understand the word platform here. With schoolwear segment leadership positions in UK, Australia, and New Zealand. They probably won't have the ability to expand into USA because we all know American children don't wear uniforms. Well, TV and movies have taught us that. I suppose it is mostly true. I'm pretty sure private schools in the United States make their students wear uniforms. Attractive transaction metrics. Will Schoolblazer valued at $60 million? So it's not that high. And 7 times EV to financial year 24 normalized EBITDA. So there you go. And if you like what you hear here, and if you want to invest in a school uniform company, you have the opportunity. Overview of Schoolblazer. Is a clear leader in the UK independent schoolwear market. So maybe UK is similar to United States, where public schools they don't wear uniforms and private schools you do, or independent schools. No idea. A nice growth, by the way. Pretty nice growth. 20% CAGR growth over the past 17 years. Yeah. Anyway, that's intriguing for me that this type of company actually exists. So let's have a look at the chart for Hancock and Gore. I'm assuming Hancock and Gore, it does sound like a law firm, but I'm pretty sure, not pretty sure, but I'm assuming Hancock and Gore are the founders of this company. And chart, how long has this company been around? A while. Not that good looking of a chart. and the share price has pulled back. Nice increase in volume in the last few years, and the market cap of this company is 102.2 million. Dividend yield 6.35%. P ratio of 7.7. There you go. Okay, that's all I'm going to do when it comes to Hancock and Gore. Just an intriguing, interesting announcement that I did read this morning. Coming in number 4. Coming in number 3, we have GDC. Share price up 7% last time I looked. 7.01%. No announcements. So you might be saying, what am I talking about here? No announcements. But this is very important. Blackstone wins air trunk auction with a price tag close to $23.5 billion. And the reason that is interesting, I just dropped something. The reason that I always have a pen in my hand, just in case I have to write something down, and I just dropped the lid. So I want to pick up the lid. So you might be saying, why? What's this got to do with Global Data Center? Well, Global Data Center owns, is it 1% of air trunk? 1% of air trunk. I am assuming it could be in the presentation. 1%. I'm pretty sure it's 1% in air trunk. Let's have a look. They should mention it somewhere. Here we go. Stake in air trunk, fair value 73.4 million. Doesn't say the percentage there. Okay. Air trunk's current book value includes a 20% minority discount. Okay. Yeah, I just wish they would tell me it's 1%. I'm pretty sure it's 1%. Anyway, I'm pretty sure it's 1%. Anyway, so it's really interesting that this information is out there, isn't it? It's out there. It's all over the front page of AFR, and the company has not released anything. So sometimes you do get this little bit of discrepancy between the market or the companies on the ASX releasing information and information that is out there. And I'm a little bit surprised it's not on here just now. And the share price has been as high as 357. I was a shareholder in this company, and I've taken profits today. I am not sure what this company is going to do with all these funds it has. And that makes me not nervous, but I just don't know. So I decided to take profits with Global Data Center today. So bought in at 236 in May, and I was just lucky that they did sold another asset in late May, just after I bought. Share price popped up 20% on that day. And yeah, even though the chart looks pretty good, I decided just to take my profits with this sort of news. And it's almost 50% higher from when I bought in. Anyway, so that's Global Data Center. And I'm just air trunk. I'm just, when I know something, GDC. Yeah, there we go. Global Data Center owns about 1% of air trunk. Okay, so hopefully, I'm hoping that is confirming. Maybe I need confirmation it's 1%. No, we'll just say it's 1%. So that means if they own 1%, that's like well, what's 10%, 1%? That's a fair bit of money. We'll just say it's a lot of money for GDC, and that's why the share price is higher. I want to do a little bit of mathematics. So 1% of 23.5 billion, so that's 230 million. So there might be some reasons why, and the market cap of this company is 255 million. There must be some reason why the share price hasn't bounced as much as it is right now, because I thought if you do the mathematics, and I'm doing it very roughly, there could be some reason behind that, and maybe some more savvy investors would be able to tell me why. So that's Global Data Center. Has not officially released an announcement today, but some interesting news for this company. Coming in at number 3. Coming in number 2, we have Golden Deeps, up 164. So share price is pulling back. And the company did release drilling results. 80-meter copper and zinc sulfide zone intersected at Havila. used to look at these sort of drilling results all the time, trying to understand it. And I'm starting to realize that I think you have to be either a geologist or you have to understand this a little bit more to know what drives the market or how the market reacts to these sort of drilling results. It does sound impressive on first read, and I sort of can understand why the market might be up. One of the things I do remember, if you do get 100 meters of positive drill results, and the grade is okay, then that can really drive the share price higher. So you're talking about 80 meters here, 18.5% copper, or up to, again, up to. So they're looking at the positives, the real positives within this zone, and they found it, I suppose. And then all this stuff, is not for me. And again, this is an exploring company. Many, many things can go wrong moving forward for golden deeps. But in saying that, I am looking for breakouts, and this is definitely on the cards. This is definitely can be considered as a breakout, because look at that chart. Now, again, there has been a bit of selling. Share price was as high as 9 cents, and now it's 7.4 cents. But there has been a little bit of buying, because in TradingView, share price is 6.8 cents. So in the last 20 minutes, share price has rebounded from 6.8 to 7.4, and the volume is high. So the market loves this announcement. But I'm going to put this into my high volume spec. Now, high volume spec, if you have a look at some of this, I actually have deleted some companies from this, but I didn't want to do that because I just want to see how the market reacts to all sort of positive announcements like this one, because sometimes the market doesn't react that well after today. So it wouldn't be surprising to see Golden Deep share price for a fair bit over the next few days. But some other companies, you see share price hold up. So is there any sort of pattern or signal that we can take away just after a few days of trading? I'm trying to remember one that fell away fairly quickly, and I can't remember just yet. Yeah, here's one. Yeah, this is one. So LBT released on the 14th of March. It didn't fall away fairly quickly, but that was a high, and it's just gone back down. So I'm trying to look for patterns. Pattern recognition can be very important. Anyway, so that's Golden Deep. If you do know anything about drilling results, seems like the market does like this one. I'd love to hear your thoughts on why you think this Golden Deeps drill is pretty good. So that's coming in number 2, Golden Deeps. And number 1 is Biome Australia, up 17.46% on it is a trading update. First quarter financial year 25 revenue guidance. I do like the marketing of this company. They are just getting any information out there, and I believe, just my personal opinion, this is the way to move forward. I think all small companies should have a really good marketing team, if not within their team, within the company, at least hire some good marketers on a maybe a part-time basis or something. I don't know. I think it's very important that you get your information out there, you get your name out there, and Biome is proving that. Because if I compare Biome to, say, EZZ Life Sciences, which should have better marketing, EZZ Life Sciences is doing a much better job financially than Biome, yet Biome has a significantly, maybe not significantly, but it has a higher markup. 135.7 compared to EZZ, which is, actually, EZZ has really gone higher lately, so it might be like 120 million. 122 million. So EZZ is much more profitable, has better cash flow, but Biome has a better marketing team, and that's why the share price and valuation of Biome is higher. And it actually is important, particularly if you want to go back to the market to raise capital, maybe for an acquisition. It's just much better for your shareholders, and also makes the shareholders feel better too. And that's probably a good thing for management. Anyway, so let's go back to this particular announcement from Biome, because the market has liked it, up 17.5%. And it's a fairly simple announcement. It's a very straightforward, simple financial year 25 quarter 1 revenue guidance, forecasting sales revenue to surpass 4 million. That's it. This would be a record quarter, lead to a new record quarter for sales revenue after last quarter's record of 3.8 million. So they're saying surpassing 4 million, so it could be right on 4 million, but it's still the market likes it. This is the sort of announcements I think companies should be doing more of, just telling us how the company is performing. And Biome's just doing it absolutely spot on. And let's have a look at the chart for Biome. And it's at all-time highs, right on. In fact, it's now at all-time highs. There we go. Really nice dip, and it's recovered very well. And look at the volume. The volume. This is a beautiful. You just study Biome's chart since July last year, and you can learn a lot. So look at volume. Look at the breakouts. There's been a few breakouts here. What caused the breakouts? All those sort of things. So a nice looking chart for Biome. Market cap now 129 million. Not yet profitable, if I remember yet, but it's getting close. It's on that. It's on the precipice of hitting that very important inflection point of becoming profitable and cash flow positive. Biome, number one, top stock of the day. Not many competitors, however. Now let's have a look at some charts. I suppose we can do that. So I might do a standalone video, maybe not today, because I thought this video would be under 30 minutes. How wrong could I be? So it will be on Stealth Group, and there's a reason why. The reason why is the last few days. Share price has taken off. They released their results in the afternoon on like 10 minutes left of trading. No, it was 20 minutes left of trading on the 29th of August, and the market loved it. Share price has risen from about 22 cents to 30 cents. So that's a 33% rise in share price, even more than that, yeah, probably about 40% rise in share price in a fairly short period of time on the back of their results. And the share price has just got, yesterday, it went to an all-time high. So I'll talk more about Stealth Group when I do this standalone video in the next few days. Beautiful looking chart, and I am a little bit biased because I do own this company. Now, the share price recently fell down to 17 cents. I was like, yeah, should I sell this company? And I was like, no, the company's really cheap. Even at that point, no, even now it's cheap, but back then it was ridiculously cheap, in my opinion, particularly because they do have some goals. And if they meet those goals, this company is ridiculously cheap right now. Anyway, let's move on to a few other charts. Yes, so I took a trading position in this company. And so they released, so I started following this company back probably in July. So it looked, the chart started to look a little bit more promising, but it took a while for the share price to break out. And when they released their results, this was a breakout. Share price on the 21st of August rallied 12.93%. And that was the colors for me taking a trading position in the company. Share price pulled back a little bit, and that was my trigger. Nice little pullback, nice little penitent flag. I think it's a flag. And then the share price ripped higher on last Friday. Went up nicely yesterday, and this is a beautiful looking chart for Helios. And then I thought, not only is there Helios, there's also Australian Clinical Labs. I'm not a shareholder of this company, and I'm thinking, why not? We're getting the same signal. If not, yeah, it's a little bit more of an extreme signal than Helios. I like how Helios is playing out, but this is a pretty rapid increase in share price for Australian Clinical Labs, and the share price is now at a 1-year high. And the other one would be Sonic Healthcare. So they're in the same space. And this one is showing signs as well. It's starting to look interesting, but not quite the reaction from the market just yet. So have I put this one on my watch list? No, I probably should. I do have it in my health watch list, but not one of my watch lists that I look at quite frequently. Sonic Healthcare. The other two are, I either own the other two companies or I do have it on my watch list. Broke out yesterday. I'm calling it breaking out. Oh, it's tested it today. Test the breakout today. In fact, the share price is right on 72 cents, which is the breakout level. If the share price falls below 72 cents the next few days, it could have been a false breakout, and I could have been a little bit too quick. So 72 cents is really important level for this company. It's hopefully it's obvious to you. If you're looking at this, you can just see it here. Not only the last few days, but also back in February. So share price got to 72 cents in February, pulled back, got to 72 cents when the company released their results, and then we had its share price pullback, and then went through 72 cents quite strongly yesterday. In fact, the share price rallied 8%. So I thought, oh, this looks like the signs of a breakout. And today the market We'll say the market is testing that breakout. It's testing, it's peppering it. Is it going to hold? Is it going to hold? If it holds, it could be good times ahead for Hum Group. Someone did mention the results weren't that good. So it looks like the market is different. Also look at the volume. Volume has also increased. So for some reason, the market likes Hum at this point in time. Min Resources. 3-year low. Oh, the chart looks horrendous. So I'm thinking with the weakness in iron ore prices, that's probably what has driven Mineral Resources share price down. It says 8% according to TradingView. Is it 8% in ComSec? Yep, 8.3%. Maybe one of the worst days this company has experienced. It has to do with iron ore. In fact, we can actually confirm this. Let's have a look at the 1 minute chart for Mineral Resources. No. Oh, yeah, no, yeah, it did. So share price is going sideways up until about 1 p.m. And then right on 1 p.m., share price was 38.60. Share price has dropped. It's dropped. It's dropped. That's not right. $2 divided by 38. So it's like 6. Yeah, the majority of the drop has been since 1 p.m. I'm just trying to do quick maths in my head. And it seems like, 1 p.m. is very important. That must have been when some iron ore numbers came out. Maybe that China story came out. So unfortunately for Minres shareholders, which I am one of, by the way, and in fact, I don't know why, because I wouldn't necessarily call Min Resources a high quality company, but in the sector, it's one of the highest quality companies. But they are trying to diversify. But unfortunately for MinRes, they are predominantly, well, apart from the mining services side of the company, they are predominantly iron ore and lithium. And what's happened with lithium? Well, not good for Min Resources. And what's happening with iron ore right now? Yeah, so a lot of bad news for Min Resources. And that's why the share price has simply nosedived over the past few months. So let's have a look at the weekly chart for MinRes. And the share price, last time was this low. Well, there's a nice little support level, by the way. So if you just draw a line right there, that's a nice little support level. And that's where the share price is right now, $36. Anyway, so last time share price was this low, was at this little bottom back in November 2021. So that's about 3 years ago. Yeah. So that article is absolutely right. And just look at the weekly. So many down weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9 down weeks since the middle of May. Ooh, it doesn't look good for MinRes. However, the more it falls, the better value this company becomes. And I was going to look at Satire. Let's have a quick look at Satire. Probably won't be much I like here. It's just rallied the last 2 days after Big Four, when they released the results on 29th of August. Share price the next day fell to $1.02. Now it's up to $1.62. There's no reason for this rally. I think this is a plaything for day traders. If you look at the 1 minute data, yep. Share price popped up higher yesterday morning from 1 cent or $1.05. I don't know. I doubt this company would have released anything. Let's have a look. Maybe they did. You see, share price now is only up 10%, but in TradingView, it's up 15%. So in the last 20 minutes, the share price has gone from $1.62 to $1.55. I suppose it's not all that much. No, becoming a substantial holder. Could be just some fund managers buying stuff. Anyway, not interested in that company. Now, in saying that, I am interested in this one. AMA Group. I just mentioned this in my technical update video, talking about it's starting to look interesting. And I think I said if it does get above this little resistance at about 5.8 cents, I'm not sure what number I said. I might have said 6 cents. If it gets to 6 cents, this does look interesting. So it's at 5.8 cents now. So definitely this chart is looking way more interesting right now. This is one I definitely want to have a closer look over the next few days. And I've got on the right watch list, Steph. We're doing that. Okay, so let's have a look at a few of your comments. So Scott, I've already really answered your comment, haven't I? A Song says, financial education channel, please. I'll take that into consideration, your thoughts. James D died in 1955. Please have a look at Trident Royalties annual report. This is for Deterra. Numbers are very weak, and they should be very weak because Trident does have a lot of lithium assets. But the reason I do like it for Deterra is because it really diversifies the company. Instead of being completely reliant on iron ore, they're now reliant on many other assets or many other commodities, including gold, lithium, silver, those sort of things. So I do understand that Trident Royalties annual report should look weak. Yes. And my net wealth is not 500 million. Real net wealth is not 500 million. I wish it was. If it was, I'd be traveling everywhere, doing hikes. I wouldn't be actually, I'll probably still be doing this, but with large amounts of money because I do like doing this. I do like investing myself. Would I be doing videos? I don't know, because I'd be doing other stuff. I get kidnapped and ransomed for bitcoins. Well, I don't have I have a very small amount of bitcoins. Daisuke says you should do a live sometimes or once a week. That would be cool. I actually have thought about this, but then I saw if you want to include your screen, you have to download some something, and I was like, oh, I'm not sure if I want to do that. So I have been thinking about doing live videos. Life's too short to work forever. You're a good trader analyzer. I bet you make more money putting more time into YouTube trading. And I definitely like it more. But where I work right now, even though I do like the work and it is stable, that's the thing, but I just don't like dealing with management. So this YouTube thing, I'm just dealing with myself. With management, all bets are off because I have no idea what they're thinking. Some of them can be completely, what's the best word? Terrible. Not all of them are. Sometimes you do get the odd good manager, but a lot of them, yeah. Anyway, and if I knew YouTube and even trading can be unreliable. Some years you might have a bad year. If I knew it was going to be a little bit more reliable, I definitely would be doing it. And what I've been thinking is if I had enough money, I could have half of my money into companies that give me reliable dividends, that sort of thing, and the other half I could be just trading. I'd love to be at that point. So thank you, Daisuke. And I have been thinking about doing those live streams or whatever they want to call. Philip says he's got Medivisa, Neuron, SKS, and Cogstate holding tight. Lucky I have EZZ as well and took some profits. You might have done well there because EZZ has been going bananas, and I did notice the share price was falling today. Yeah, I would say that's a bit of profit taking with EZZ Life Sciences. So congratulations, Philip. Nice. Hi, Kneppy from Rog Aldorn. Just for something different, do you hold or trade options? Once. Findy. So when Findy did a capital raising many, many years ago, as a part of that capital raising, we got some options. Those options expired in January of this year at 90 cents. And I had to tell NetWealth, I want to exercise those options. I told them 3 days before they expired. And it was supposed to tell them 1 week before they expired, but they didn't say anything to me about that. I just thought, oh, geez, am I a little bit too late? And so don't forget, I exercised those options at 90 cents. And the share price of Findy right now, $4.22. This is in January of this year. Yes, I'm not kidding. January this year, the options expired 17th of January. Share price of Findy at that point in time was just above, well, around about $1. So there wasn't much of a premium to the exercise price. And there was just before that, on the 9th of January, the share price fell to 87.5 cents at the low. And that was below the exercise price. So at that point, I was like, oh, might not even have to, I won't have to exercise it because they're going to be, share price will be below the exercise price. And if that happens, you don't exercise them because you can just buy shares on the market at a lower price. And then as soon as those options were exercised, share price just went higher. I just can't believe that was a catalyst for sending the share price higher. And probably the better way to say it or think about it is one of the reasons why the share price went sideways or even was drifting down was because of the exercise of those options and those options coming to exercise. And so it did sort of suppress the rally in the share price. And when those options or that they passed, there was none of that resistance, suppression, and the share price was able to go back into a run. So once, only once have I held and exercised options. I've never traded options. I was thinking of doing it. I'm trying to think if I've traded options in the past. I might have traded options once or twice in the past because I just didn't want them. Maybe, but I can't remember. And that's it. That's Showbiz saying that GR Engineering did go ex-dividend. This time of year, you have to be cognizant of that sometimes share price of a company could drop because they've gone ex-dividend. It happened today with SVR. I bought yesterday. I knew it was going ex-dividend today, 5 cents. I was like, if the share price doesn't fall 5 cents, and I bought yesterday, I've won out, and it hasn't dropped 5 cents. It's dropped just below. It's only dropped 4.5 cents. But you do have to understand when the share price of a company drops, it might be this time of year, it might be because it's gone ex-dividend. Thank you all. Scott also says, tough day in the market today, though watching PME creep from red to green was awesome. USA has a holiday on their Monday, so I bet tomorrow could be a fun trading day too as a result. I reckon Helios was my stock of the day. I've already talked about Helios today. I'm generally not into buying stocks hovering around their all-time lows, but I'm happy I grabbed some of Helios. Yeah, it is tricky buying all-time lows because there's a reason behind it, but particularly when it comes to cyclical companies, that can be the best time to buy mining companies. But you do have to be also aware if a company is at an all-time low, there might be some reason behind it. For instance, Mosaic Brands. I just love kicking into Mosaic Brands. There is a reason behind it. I won't talk more about Mosaic Brands. But thank you, Scott. And the last one, Kneppy, curious on how you deal with society pressure of the expectation of getting married, given that I think you once mentioned you're single, not married, or was that not having kid but partnered? And then Michael Jordovich says, best to keep comments relevant. Okay, so I suppose I will answer this. Why not? I have never felt any pressure to marry. I have never wanted to marry. I think it's a ridiculous. I'm sorry if you love being married and that sort of thing, if you want to get married, but for me, it means nothing. To me, it means absolutely nothing. My parents are still together after being married for over 50 years. So it's not like I've come from a divorced family, so I don't like marriage. I just don't see the point of getting married. It just doesn't mean anything to me. And I just don't, there's been no pressure for me to get married. So where's this society pressure coming from? I sort of can understand it. I remember watching this movie quite a few years ago. What was it called? The Family Man, I think, with Nicolas Cage. Family Man, 2000. Nicolas Cage, yeah. And so he was single, he was living a good life, and then he had a dream or something, or I forget what happened. Maybe it was an accident, went into a coma, and there was this alternate life where he was married, nowhere near as rich. He was really rich in his single life. So he had a family, much poorer, working man, blah, blah, blah. And the whole movie was just trying to say, you're much better off if you're in a family. And I was just thinking, that's so, I hate when movies have that sort of message where you need to be happy, you have to be married, you have to have kids, that sort of thing. I understand children, it's a biological thing, but there's a lot of people in this planet, and the whole point of procreation is to keep the species going. That's the biological need. In fact, if you want to say what's the meaning of life, it's to procreate and have children, to keep the species going, but humans don't have that problem. We should put more attention into those species that have like 5 or 10 more numbers left in the wild or even in captivity. That's what we should putting our money into, not for us to have children and that sort of thing. But also understand, and I also think another reason why we are seeing population dropping throughout most of the world, apart from Africa and some other countries, is because this biological need to have children is dying because we just don't need children. And I do think there is some sort of biological thing happening where if there is a great amount of population of a species, I think nature just finds a way to say, stop having children. But anyway, that's just me. I have never felt pressure to get married. Never had any pressure to have children. It might be different for women. It's, I would assume it is, but I've never felt any pressure. And I believe if you ever feel pressure and you don't want to get married or have children, just live your own life. It's your life. It's not their life. It's your life. And at that, I'm going to stop this video because it's been 1 hour. So that's it for today's video. Have a good day. And don't forget, if you want to leave any comments, you want me to answer anything, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.